Hey Ben. All right.
What's up? How you doing?
Hey, Dan. Good. How's it going?
Doing well.
What's up, Danny?
Good evening, Mr. Goff.
Today is getting rough. Getting rough with
Woo.
this. Yeah, this stuff. There's a lot of stuff going on right now. The biggest one in my life right now is the depegging of UST, which is very bad indeed. So that's got me a little worried. Yeah, just hoping outside of that, there's some decent stuff going on.
What's going on with that? That's new to me.
UST is a stable coin which I have been using for a while and I lend out and collect interest on. And today, for the third time in their history, although the last two times weren't so bad, they have depegged from the $1 value that it is supposed to be stuck at. Uh, they are down to about 90 cents. So their coin fell 10%. So my stable coin, which was supposed to hold all my value in it, basically went ahead and actually fell 10%. So that's kind of messed me over. And I'm just watching the money flow. I've seen $6 billion move out of the coin today. So that's not great either. Market cap's kind of getting killed. I mean, there's plenty of people kind of discussing this. If you just look up UST or UST depeg on on these things. So yeah, that's just like a couple of pieces. Yeah.
You got like a one-line summary of the cause of that?
Oh yeah. So the biggest cause is Bitcoin falling. So Bitcoin is one of the backing assets. They have a treasury of Bitcoin, and the goal with that was to help provide stabilization. So as Bitcoin is falling, it's hurting them. And then the other thing is, it appears to be that there are a number of whales that are actually taking advantage of falling Bitcoin and are actually attacking the price of UST via arbitrage opportunities and are basically running like nodes where they're basically just exchanging cryptocurrencies rapidly with the goal of basically just continuously hurting the value of UST in relation to other currencies. So it's not something which I personally would know how to do. That's just my brief summary from a few hours of reading at this point. But yeah, it's basically getting attacked and suffering from general market weakness. If Bitcoin's able to bounce back, I don't think that this should have a problem. The problem is obviously, right, like what's happening with Bitcoin right now, what's going on. So there's a little bit of stuff to be bearish. But yeah, I mean, it's just scary that I've been having a good amount of money sitting in this for a while, as a stable coin where I was just like loving, hey, this market can keep going to shit and I'm chilling, and all of a sudden my stable coin's down 10% today. And that's not great. So that's kind of where I'm at.
Nothing's safe. Not in this environment.
Yeah, no. I mean, USDT and USDC are still holding their pegs. I actually am just a little bit annoyed with myself because I, saw this kind of in the midst of it happening earlier today. I had, a moment where it was at 0.96. I looked at it. I said, hey, certain metrics get broken. I'm going to pull out. Did not. Saw certain metrics get broken. Did not remove. And now it's obviously down another, 6% since. And yeah, every penny that this moves is like a pretty significant loss currently. So just like hoping, but it's moving so quickly and in a way where it never has had like price trading activity. It's never really moved on a daily basis, and now today it's having moves of 5 to 10% over the courses of hours, right? So it's just like a whole different system as they're attempting to stabilize it, but they do seem to be getting botched down. But however, this is not really a UST crypto space. So I'll bring it back onto the main topic, but I'm happy to chat some of that on another space in the near future. It's just something which has certainly been on my mind right now. For anyone else that does own sizable quantities of UST, probably you have it in Anchor Protocol like I do. It's a little bit tough as well. So let's get right into it here. Welcome in everybody to an evening of market sentiment and stock picking. We have a new guest with us tonight. We have Sim on here. Mel is getting ready for the conference, and Exclusive couldn't make it, so we wanted to have a nice full panel going on. It seems an awesome trader. Yeah, real tough day in the market. I'm sure we're going to get into that. For anyone that's unfamiliar with the layout, we're going to do market sentiment. The goal with market sentiment, and I know people have been going over this, so I'll just ask people to be a little bit more mindful. About 2.5 minutes to 3 minutes max on those market sentiment pieces. Otherwise, we start just getting pretty repetitive. So we'll go with like the 2.5 to 3 minutes, and then once everyone's done a little bit of market sentiment, we'll flip over to stock picking. We'll each give two stock picks. These are picks for the week. I'll take a look right now. I haven't done it yet. It's just been a crazy day as to who won from last week, who had the top stock picks from last week, and then in addition with the stock picking section, I will just ask everybody to kind of give their closing remarks during their stock picks. So let's start out with market sentiment first. Danny, would you like to go first?
Sure. It's been a long day on Spaces as Mondays tend to be. It's the opening of the week, but yeah, I think no reason to beat around the bush. I think we've kind of seen 400 SPY, 300 Qs. It's been in the radar for some time now. I've been talking about this gap that we've seen from mid last year on SPY that got filled today, finally. So I think we finally have moved past that. The question now remains, how much further downside do we see in the broader market? And if we do continue to see the market fall, what's showing relative strength, and where is the bottom going to be? And I think from relative strength, we're still seeing strength in energy and certainly in consumer staples. I've got a banger of a name that I'm going to reveal later that I think is going to be kind of shocking and also interesting at the same time, that I really haven't heard anybody talk about. So I think that'll be pretty interesting. Obviously, we have CPI on Wednesday. I think many feel like we'll get a little bit of a relief bounce tomorrow, maybe even a bounce into CPI. But I think, that's right now. Last week was FOMC. This week is CPI. It just seems like week over week, there's these big market events that are really everybody's just holding their breath. What's going to come next? And yeah, I mean, I'm sure there's going to be a lot of talk, from Andrew and Sim and Blake and Vegas and Story trading. So I'm going to keep it short and sweet. I know a lot of people are feeling a lot of pain, especially in their long-term portfolios. For me personally, I've been sitting mostly in cash in my swing trading and day trading, obviously, day trading accounts, taking really just measured attacks on right now. I'm mostly just focused on the indices. I'm not looking at individual names from a trading perspective. But certainly energy and staples are where my eyes would be on a relative strength basis. And like I said, we can certainly look at some names, but it just seems, in this market right now, nothing is safe. Gav, you're talking a little bit about crypto, and even though this is not a crypto space, we're seeing a flight of most currencies, indices, and everything, and nothing is safe right now. So yeah, I think we'll talk a little bit more about an individual name or two later on, but certainly looking forward to hearing what my peers have to say up here. And rest assured, everybody, I mean, we're all feeling a very similar pain. So this is why we have these spaces to talk through the ideas of what we're all seeing, and looking forward to what everybody else has to say.
Perfect. Appreciate that start there, Danny. Yeah, that accurately summed it up in my opinion. Let's definitely keep it rolling from there. And Sim, would like to hear some market sentiment from you.
Yeah, absolutely, guys. Well, I mean, kind of for me at least, my one of my price targets for SPY, this was a couple of weeks ago, was that 403 level. We did get to that 400 level, and then we saw a little bit of upside, potential for a bounce. And I know a lot of people that kind of got stuck in that, and then unfortunately got caught up in that end of day little sell off that we had. Couple of the key levels that I was looking at for SPY underneath that 400 was going to be that 398.7 level. We broke underneath that to the 396.5. Next stop that I see is going to be that 393.2 level. We may get there this week. I mean, overall, for me, sentiment is very bearish at this point, especially with that break underneath 400 and hold. We were trying to hold that level, like I said, but bears won today. So that's one of them. And then obviously the 300 level, similar to what Danny was talking about on Qs. So definitely was watching that as well. Going into tomorrow, when it comes into any individual tickers, Tesla and Amazon is what I'm going to be heavily looking at. I looked at Tesla today. It held that 780 level, bounced right off of 781.15, which was the low of the day. And now we're looking at it sitting close to about 790 after hours. So definitely going to be watching that. Wanted to potentially get some leaps. So definitely going to be seeing if we get a little bit more downside to that 750-ish level, and then going to start adding in a position for some Tesla 1000 and 1200 leaps. And then also looking at Amazon for tomorrow, we broke underneath that 2200 level. One of my levels was that 2220. Underneath that was 2212. Underneath that was at 2200. Broke underneath, hit that low of 2159, and then we see some upside right after that. Nothing crazy though. Again, like I thought we were gonna close over 2200, we didn't. So definitely gonna be looking at a potential rejection for some more downside. And then gonna also be picking up some Amazon leaps as well, far out the money, but also further out expiration dates. We're experiencing a pretty heavy sell-off. Now's the time for myself, at least, to start adding. So definitely gonna be adding sometime this week. Not gonna say it's necessarily gonna be tomorrow, but definitely within the next week or so, maybe even 2 weeks, gonna start adding some positions.
Have you thought about selling puts?
I'm not one of those players in the market personally. I just kind of stick to what I know. So, but I do know a lot of people that did sell puts and they've been doing really, really amazing at it. I just am not that knowledgeable in that type of trading, so I just stick to buying naked calls, naked puts.
Cool. Awesome, Sim. Great having you on here.
Yeah, thank you. I appreciate you having me on.
Absolutely. Okay, Vegas, what's going on with you?
It was a pretty crazy day. I thought it was a lot of chop and opportunities definitely to make money on some reversals and obviously money to the downside. We could see that the market was showing us that this bearish sentiment was evident. And similar to Sim, I was actually watching the markets a lot and noticing also a lot of bounces were getting sold, and so obviously the trend right now is to the downside. However, I'm keeping my mindset open because I think there has been a lot of stocks selling off on market weakness, and so I think there's going to be some definite opportunities to take advantage of some stocks that are, that have had a significant pullback. Like I was watching today, like Nvidia was a great opportunity for puts, and I think I could go maybe a little bit lower, but I think once it's pulled back, I think this could be an opportunity. I know that earnings is coming, so kind of really looking for some shopping opportunities to go longer term. And I'm also keeping a watch on the China stocks as well, because really liking I'm really liking BABA. And so I'm going to be watching some things to see if there's any opportunities, especially like I think a lot of Chinese stocks can offer some high returns. And I think BABA is like a really strong one. And I know a lot of people like it in their portfolio. I don't have it at this time, but I'm definitely going to be looking at some shopping opportunities for sure. So be happy to share some ideas and what my thoughts are for some plays for the week. So definitely going to be sharing that when we go around the table. But right now I'm just, been having to be bearish and play some reversals, and not really going in super heavy either. I played some call options as well when there was the reversals, and look forward to seeing what the CPI data will be. And similar to what Danny said, could there be maybe a short-term rally, and then, will it actually stick? Remains to be seen. So we'll have to, just be flexible and adapt to market conditions.
Okay, perfect. Yeah, absolutely. A lot of this market is going to be about flexibility. And seizing the opportunity, right? I remember it falling during March 2020, and a lot of people getting pretty terrified then, and not buying as much as I wanted to buy. There were some great deals then. Like I was buying Penn at like $4 or $5, right, and a bunch of others that ended up having some great runs. So yeah, definitely some stuff to keep an eye on. All right, Andrew, what are you thinking?
What's going on, everyone? Thanks for having me on. Yeah, so I think a lot of our panelists have summed things up pretty well. Right now, my trend model is at a -3. When my trend model is at a -3, that means I have to carry a higher cash balance. But like Danny said, like everyone in this marketplace is experiencing some form of pain. Like even if you're in 100% cash, your dollars are being inflated away. If you're in cryptocurrency, you're experiencing pain, stocks pain, bonds, which are supposed to diversify you, you're experiencing pain. If you're a homeowner, so yeah, everyone in this marketplace, we're all experiencing this tough period. And these kinds of drawdowns, like what we're seeing here, this is definitely reminding me of the price action that we were seeing during the coronavirus crash, where the market looks like it's getting pretty oversold and like, oh my gosh, these stocks are getting really cheap. And then you take a swing at some stocks and then they just seem to keep going lower and lower and lower. So like I'm starting to get a lot of text messages and phone calls from people that I know that, they're not even really into the financial markets or trading or active investing. And they're saying like, hey, I'm getting concerned by what's going on in my 401k. So definitely rest assured, like we're for sure getting there in this sell-off. Right now with where the market is currently, we're sitting at around SPY 400. And for the May 20th options expiration, this is a key level where there's a ton of options open interest. So right now we're pretty much sitting on a pretty big support level. And we have this CPI data point that's coming out on Wednesday. So for today, I did not do any trading. And I'm actually still in New York. I don't even have a mouse right now. So yeah, today I wasn't really in a position to, but yeah, I think we're all just going to really have to wait until Wednesday to see how the chips fall. Because with the way this market is going, so long as you're defining your risk on the downside when you're taking an entry, I think that's certainly just fine. But I think the way these moves are starting to unfold, it's kind of similar to like when the market was in this crazy bull market, how the prices of these stocks, they were just going up and up and up. And there were those people saying like, this doesn't make any sense. Why are these stocks trading at these elevated multiples? And it was really just, everyone's making a ton of money. So everyone has a ton of cash to deploy and, they're just diving back in. I think now we're seeing the opposite feedback loop where almost every asset manager, they're in a big drawdown right now. And typically what happens to these big asset managers is, when they're in a big drawdown, they don't have that firepower to buy the dip because their risk manager is most likely tapping them on the shoulder and saying, hey, you actually have to cut your risk. So I agree with a lot of the people on the panel that, there's some great long-term opportunities that are developing here. But I think like everyone would agree, like, you might try to catch the bottom and, you could really get hurt. So I think, super important to just make sure that you're defining your risk on the downside for sure.
Yeah, great points. Using stops, other things like that. Got to keep yourself out of terrible situations. Absolutely. Okay, Ben, what are you thinking here?
Gav, thanks for having me back. I missed you guys last week. I was out sick. Nice to meet you, Sim. Welcome to the panel. So those of you who are not familiar, at Story Trading, I do things a lot differently than most of the panelists up here. I'm not a pure technical trader. I look at what we call the four pillars, which is fundamentals, technical, sentiment, and catalysts to get a holistic view of price action. Why is a stock doing what it's doing? The premise behind that is there's always a logical and identifiable reason behind price action, right? It's not random, it's not chaotic. Well, it is, it can be chaotic, but basically the point is there's always a reason behind the price movement. So, some of the analysis I'm going to give here is kind of a combination of sentiment, fundamentals, and technicals. And I got news for you, man. I've been, as you've known, probably persistently bearish since I started coming on these spaces. And that started in early November with ARK-K. which I predicted, the risk assets would be the first ones to get killed, followed by the higher quality companies. Now, I've been kind of short Apple a couple times, very bearish the generals. And the whole reason behind that, if you look at a stock chart and you see the price post COVID, and you see that was all the excess liquidity that was pumped into the market, right? And you saw that all taken out of RK and the growth assets, but it hadn't yet been taken out of Apple and Netflix, right? The big companies, and that was what was holding up the Qs. I'm only looking at the Qs for this analysis. So for quite a while, I've been targeting around 276 on the Nasdaq as not necessarily the ultimate bottom. It could possibly be the ultimate bottom, but I was targeting 276 as kind of a magnet. And I got that from, again, this combination of the fundamentals and sentiment here. But with the chart, you can see on the 200-week moving average has been a consistent support level for each of the prior crashes over the past 5 years in the Nasdaq, and it didn't touch it directly. It's always a little bit above it. So I took that level, kind of extrapolated over time. Where would that 200-week moving average be over time? Right now, it's at like 262 or so, and then I noticed a zone of congestion in the 270 around the 275 area. So I've been sticking with that, and now it's like really coming into view, this 276. And the R, now that we're here, now that we're very close, it's only 6-7% away. I'm noticing the RSI is coming to this very similar levels as the COVID crash in the 5-year weekly chart. It doesn't matter the range, but the weekly chart, right? The RSI is very similar to where it was in the COVID crash and also in the 2018 bear market. So I'm actually going to upgrade a little bit the range and rather just call it a 276 as we're getting closer. I'm going to say 275 to 285 is an area where we could see significant support. So much so that I think I'm going to play it significantly, and I'm looking for a rally. It could end up being a bear market rally, right? This could end up being a bottom and we eventually come back lower, but it could be the bottom. It really depends on if there's a recession or not. Everything we've seen so far is simply taking the froth out of all that excess liquidity that was put in the market. So going to that 276 level, it doesn't convey anything necessarily alarming about the economy yet. It's just simply a correction because of higher interest rates. We're taking out that COVID excess. So ultimately, if there's a recession, we can go much lower. But I really think this 276 or 275 to 285 level on the NASDAQ could be a place where you can get a 10 to 20% rally. Again, we'll know in the future if that's a bear market rally or the start of something longer. My guess is it's going to be a bear market rally and we're going to head lower after that. But I'm actually getting pretty excited right now. I reduced some of my hedge today. I had some PSQ in my IRA, and I sold like maybe 20% of my PSQ today because I think we're very close to capitulation to reach that level. I can, we've been, that phase, that market psychology thing. And I've been saying for a while, we're in the denial phase. Last week, we started getting into the panic phase. Denial is definitely in the panic phase, right? And the next is capitulation. So I think we're very, very close to capitulation, not there yet. And hopefully everything will line up just perfectly. So between the technicals and the RSI and the fundamentals and the sentiment, it'll be right around that area that I've been calling out for a few months, 276 to 285, 275 to 285. So I'm actually excited right now, and I'm hoping to, and I felt the pain, right? Even though I've been so good from a macro perspective calling this from months ago, I didn't play it right because I had the hubris to think I can pick the 2 or 3 stocks that's going to buck the trend, right? So I only ever had like a small hedge position since November. So I'm definitely excited to go on the long side here, and we'll see what happens when I sense that capitulation come in.
Okay, interesting. So, more people moving into taking off hedges and potentially looking for some long opportunities. Like to see it. Appreciate that, Ben. All right, Blake, throwing it to you.
Yeah, what's going on, everybody? Thanks for joining in on another Friday. Most of our speakers up here have summed it up pretty well. Similar to Ben, I've been bearish really since we broke the 50-day moving average back in the beginning of this year, January. So once we broke that, that was my indicator to take the foot off the gas pedal. It's a new year, time to reassess. Yeah, and we've been in a massive downtrend really ever since then. We've had two uptrends this year, and that's when I trade. I trade the uptrend. So, yeah, definitely a different style than Sim and Vegas. I would not touch Baba with the 10-foot pole. I think it looks terrible. I would not try to pick that bottom, and I would definitely not be trying to average into any leaps just because at these levels, I think this does feel a little bit different than what we've seen over these past 5 years. What's different is we have, a slowing economy. Growth has stalled, and we have massive inflation, and we have other geopolitical factors at play as well. So, yes, we are well off of the highs, but I think we can go much lower, and I think that much lower is going to be not necessarily a burn for the average individual of drawdown, but just the sheer amount of time. I'm based off of this price action over these past couple weeks. I'm gearing up for a prolonged bear market, a 12 to 18 month bear before we start to really see some true upward momentum. And until that happens, I do not have my shopping list out. I've been in cash primarily with equities, and yeah, Gob, like almost 90% of my net worth is in Ethereum. So that took a big hit today as well. Good thing is that's a long-term position for me. But yeah, overall, I think this market definitely is, not healthy. And I would not be trying to call a bottom anytime soon.
Yep. I'm looking for SPY at least down to 384. Posted that with a little bit of a chart around it today. So I think that there's a lot more to happen there. Okay. So
I just want to jump in just to make sure no one misunderstood. I actually agree with Blake there. And I don't think those levels I called out is going to be the bottom, just a tradable bear market rally. My suspicion is we're going to have a recession, get some recession data, and go much lower after that bear market rally.
got it. Okay. Awesome. So we're going to move into the stock picking section. We made it through market sentiment at about 30 minutes, which is great. I see a few people requesting. I'll just let you know that we do have a set panel for tonight's space. However, if you DM me a question or something like that, if it's applicable, I'm happy to ask it to the panel. We're just not going to bring up requested speakers this evening. So just letting you know now. All right. With that being said, and that's mostly a time thing because to be honest, we run already an hour and a half with just the speakers up. And if we start bringing up other people, it just adds on 5-10 minutes per person. So with that being said, we're going to head right into stock picking, and together with stock picking, we are going to attach on the closing remarks. Let's get to it. Vegas, would you like to go first?
Yeah, sure. And just to comment, like when I was talking about China, I'm just keeping my mind open. I don't have any BABA or anything like that. I'm definitely gonna just keep a watch and see as time evolves, like, if there's opportunities. But I'm definitely I don't have any positions or anything like that on that. But I definitely appreciate Blake's comments because we don't want anyone losing money unnecessarily. So, but definitely, I just like keeping my mind open about it. In terms of a stock pick, I definitely was very impressed today with Walmart. And we saw Home Depot was really strong, but Walmart was really strong too. And when I was taking a look at the weekly chart, I found it looks, potential. I mean, anything's possible, of course, but looking for some continuation. We had support at the 50-day. And when I looked at the weekly chart, I also liked the fact that we were over that 9 EMA. Some people like to look at the technicals, but I did like the volume and the action. So that's going to be one of my picks looking for a continuation on Walmart. I definitely wouldn't want it to go below 146.66. So that would kind of be like my stop on Walmart. So that's like one of my picks. And then the other one that I'm looking at in terms of, I'm not in it right now. I'm going to be watching these financial plays because I noticed today, all of a sudden, like Goldman Sachs had a new high, JP Morgan had new highs. I mean, they're on watch. And so I'm going to be watching in particular JP Morgan. There was a lot of money flow coming through. So I am going to be watching to see if that stock will break 125. If it does break, then I will be happy to take a call position on JP Morgan, but it has to break 125. That'll be a key resistance. And if it does break, has a pretty decent move coming towards 130, 132.50, or a little higher than that. So I'm going to be watching JP Morgan on the break of 125. So it'll be interesting to see what's going to happen with these financial stocks. So those are basically my two picks that I'm going to pick for the week. So none of them, I don't have any of them right now in play. Just the Walmart, I had it for a day trade, and I did keep it for an overnight swing because I like the way that it did close. JP Morgan right now, no position, just on watch. And those are really my two picks that I'm looking at.
Awesome. Got it. Walmart and JPM. All right. And I'm going through some of these picks from last week, and I'll tell people soon how those turned out and kind of who was the winner from last week. I will say we often do throw out a lot of long calls in this space, which I think is good. You know, it's a good opportunity to find some long-oriented names. However, last week was not too kind. Well, it's also built into today because we go from Monday close to Monday close. So, you know, today is factoring in to the picks from last week, for better or for worse. So just one thing to note there. That's why some of these are ending up being a little bit farther down, and I'm almost at all of them. So I'm just going to read these off, and then after I finish these, we'll go over to Andrew. But this last one that I'm grabbing from here is going to be ARKK, which I don't think had a very good week. Yeah, minus 16.5%. Okay. Yeah, to be honest, all the plays last week would have been really good shorts. They're given out as longs. It's kind of more of a looking at, I guess, the least damage that was done, which I guess there's two ways to go about this. Danny, I'll say least damage done would go to your picks of Facebook and STNG. Obviously, they kind of got rocked today. They were doing pretty fine up until today. They finished today for the past week -6 and -7.5. So yeah, I guess you just have to factor that in. And then Blake, I'll say, you know,
UNG held in there for a little bit, man.
That's what I'm saying. And then it just got absolutely massacred today. So I was gonna say the other one that would be like, if it didn't happen today, UNG, went down 12% today, but they were at one point up 10%. So they had a 20% swing. So we'll go
That's
by
nuts.
Yeah, least value destroyed. We're gonna go to Danny for the week. So by proxy, shout out Danny. But yeah, let's come over to Andrew for your stock picks for the week.
What's going on, guys? And so last week my pick was ARKK, and I was looking for a bounce into FOMC. That one performed really well on FOMC, but then, immediately after that, it really just tanked, very hard. This week, what I'm looking at, and this is another position that I currently have on as a long. This is Blue Links Holdings, and it's a bit of a thinner name, and it just reported earnings last week. And this stock, what you'll notice if you take a look at the chart, the ticker symbol is BXC. This one's trading really close to 52-week highs. So again, it's a home building stock. It reported earnings, and I was doing a scan of this one. Like pretty much every morning, I'll do a scan of the companies that reported the day before just to see if any of them were forming a power earnings gap setup. And what was really interesting about this one is that they beat on their sales and their earnings. They raised their guidance. The company at the time had a market cap of around 750 million, which is pretty low, right? And they announced an accelerated share buyback worth around 100 million bucks. So I literally lit up when I saw that. I was like, oh my gosh, that's 1/7 or 1/8 of the entire float. Given that this is a lower float name, its average daily volume is maybe 170,000 shares. I was like, wow, this could really lift the stock. So I entered that one at around $88, and it had a really nice move, and it was even hanging in there for a couple days while the market was very weak. I took off 50% of my position when it tagged $100 because it did so in maybe 2 days. Now, with how weak the market has been, it has pulled back for the past few trading days. What you'll notice is this one is still, really close to the all-time highs. It's maybe around $94 now. So with this stock, it's one of few long entries that I've put on where I've actually hit my profit target and I haven't been stopped out. So that's really when the market is, this tough, I'll put on test trades and I'll see what sticks. If it hits my stop loss, I'll just take it off. But this one has really hung in there and stood the test of time. So for this stock, if the market shows any signs of strength, let's say we get that bounce for the CPI print, or we just hit a local bottom and the market has a face ripping short covering rally, I'll likely be looking to add to my position in BXC. So I think I like this one because it actually is a much thinner name and it has that accelerated buyback. So there's some buyer that's coming in behind you on this one. So yeah, that's my only pick for this week, BXC, and I do have a position in it.
All right, BXC. Yeah, that's one that we actually were live trading last Wednesday, right after those earnings did come out. It had popped up to right around, I want to say 91-ish, and Exclusive was basically calling it for a play right there, and then we ended up taking it and had a nice run towards the end of the day, and has held up much better than the rest of the market. So yeah, pretty interesting pick there. BXC, got it, blue links. All right, let's keep it rolling here. Let's go over to Blake.
Yeah, man, can I say cash? I mean, literally nothing in this market right now do I really want to long. Commodities look terrible, equities look terrible, fixed income looks terrible, crypto looks terrible. I mean, where do you put your money? You know what I'm saying? So yeah, I think for me this week the play is going to be cash, just because at this stage in the game, if you're not already short, pressing down here is, man, you're really pushing your luck, right? I mean, we're well off the highs. Now is not the time to press short, in my opinion. The time to press short is when you break trend, you close below a 10 SMA, or lose some momentum, break a key level. That has already happened multiple times. And so trying to get greedy down here and pressure luck and say, okay, this it's gonna roll over. I mean, it's showing its hand. Yeah, typically when you try to do that, that's typically when the market likes to slap your hand and say, hey, you don't tell me when I turn around, okay? But yeah, this week I'm gonna have to say cash, just because there's really nothing that I like in any market. And that's expanding across all different asset classes. So, and then like I said, trying to do anything on the flip side, trying to do anything short, it's just a huge risk down here. So yeah, my play this week is going to be no play at all. Sit on your hands, have some patience, go walk the dog, go work out, do what you got to do to get away from the screen.
Sweet, man. Okay, so no.
I think
Yeah.
Blake already won, Gov.
It's likely. Yeah, I'll say
It's
everyone.
like the Price is Right, 0, 1 penny.
All right, so no picks this week, Blake, and appreciate that. And I forgot we were doing kind of closing remarks with it, so I'll come back to Vegas and Andrew for a second. But anything else you wanted to say, Blake?
Yeah, basically what I just said, this week really, I know I say it every week, but you don't need to trade every day. And this week in particular, this Monday was really ugly across the board. Lots of panic and lots of fear in the market. And so, yeah, I think the best thing to do this week is just kind of do nothing and let this kind of, play out. And, if the market starts to get some momentum and we start closing above a 10-day moving average, hey, I'll take a stab at it, and I'll take a test trade like Andrew was talking about, with defined risk and a stop. But until that happens, yeah, I'm staying away from this market.
Awesome. Yep, appreciate that info. It doesn't make sense to overtrade in it. Okay, watching some things. All right. Andrew, I wanted to just circle back to you in Vegas for a second, just because I know we were doing the closing remarks with the comments. I don't know if I gave you guys enough time on that. Is there anything else you wanted to say?
Yeah, sure. So Yeah, my final closing remark is, you're going to see a ton of things on Twitter, and like most likely, like on days like today, when the market is like careening to the lows, you'll see everyone like, you should be at 100% cash right now. What are you doing? Manage your risk. And what I would say is like, everyone makes mistakes in these kinds of environments when the market moves very quickly. And this is for anyone that feels like they're out of position and maybe they're like in over their head. It's never too late to make the next best decision. So like even if let's say you made a mistake, you're overexposed to this market, whatever it might be, if you have any sort of like process or template that you use for your trading or investing, just because you made that mistake, it doesn't mean like you have to keep making the same mistake. So I would say like if you're drifting off or if you're making tactical errors, just be like, okay, I may have made some errors in the past, so I'm going to leave that in the past, and then just readjust yourself. But yeah, thanks so much for having me on, and yeah, I always appreciate being on these spaces.
No doubt. Awesome. And Vegas, just going back to you. Yep.
Yeah, I appreciate that. I just wanted to just comment, just tomorrow, we do have a lot of Fed speakers tomorrow. We have actually 5 Fed speakers tomorrow. So we usually know when they do a lot of talking, a lot of volatility in the market. So to anticipate that, we have them, John Williams starting at 7:40, Bostic at 8:30, Barkin at 9:15, and then Kashkari's talking at 1, and then we got Loretta Meister talking at 3. So we have 5 Fed speakers in one day. So that's a lot of talking from the Fed speakers, and we know that the market sometimes doesn't like the stuff that they say. And so just anticipate potential more volatility tomorrow, and then obviously Wednesday we'll have to wait and see at the CPI data. But I'll post it on my feed, all the Fed speakers. So when you notice there's volatility, like wondering, what's going on, at least keep the schedule in mind, because they're talking at various intervals throughout the day. So just want to mention that as well.
Perfect. Okay, let's pull back into some more of these stock picks, and then just everyone giving their stock picks, just kind of double down on the back half of it with your closing remarks. Let's go over to Sim next.
Yeah, like I said, majority of the time, at least overnight, I typically sit cash. But these levels right here, I mean, I still think that we may see some potential upside. I mean, I don't think that as of now, I mean, again, like I don't do any short-term swings. Typically, if I'm gonna be swinging anything, it's gonna be a long-term type of leap in this type of situation. But Google, Tesla, Amazon is really what I'm looking at. When I size in, it's 25% is my starting position. So again, that may happen this week. It may happen next week, but we'll see. Majority of the time, just like today, for example, I just sit on cash. Cash is king to me. Cash has always been a position, so I like to stay cash. And then if I see an opportunity in the market sometime during the week, definitely we'll start sizing into some sort of leaps. But again, the sizing goes with I start off with a 25% sizing first, and then sizing accordingly depending on what the market looks like. So Google, Tesla, Amazon. I don't know how many I could have picked, Wolf, but
so two official picks, if possible, if you lay those out.
Okay, we'll do Google, and then I'm liking Tesla more than Amazon, so we'll do Google and Tesla.
Okay, perfect. And any other remarks or thoughts you want to share?
I think what the other gentleman before me was saying is really important. Don't feel like you're not a part of something, or don't feel like you've sat there and you made a bunch of mistakes or whatever, or maybe you're not in a position right now and you're kicking yourself or punching the air. I always say the exact same thing, and dwelling on what you messed up in is the quickest way for the next thing not to work. So it's best to take a step back and be patient with yourselves in a market like this. We've experienced a lot of volatility. I'm a scalp trader in the market. I live off of the volatility, but it's been really difficult for a lot of day traders and a lot of swing traders. I mean, today was phenomenal if you were a day trader, but other days it's been a very kangarooish market. So now that we're seeing some bearish sentiment, again, just like the other gentleman said, there's nothing wrong with sitting on cash. My risk may be different than other people's, and that's okay. We all trade differently, but our motive is still to make money. So you know, again, I take it as the whatever the market provides is what I take. I'm strictly trading based off of supply and demand, based on price action. So going into the week, I'll just be sitting cash and just kind of waiting on when to strike. But you know, as of now, I don't have any type of potential levels or any like price targets or anything like that. It's going to be mainly a bunch of scalps that I'll be running throughout the week, all based on supply and demand and price action. Hopefully, we get good price action on that and a decent amount of volume throughout the week.
Absolutely. Volume, liquidity, that's all going to be key. Awesome, Sim. Well, great to see you make an appearance on this. We got Google and Tesla marked down and looking forward to seeing how they do. Appreciate you being on.
I appreciate it. Thank you.
Absolutely. Okay, Ben, coming to you.
All right. Well, in this environment, it's going to be hard to say, hey, go out and buy this now. These are more long-term swing ideas or even investments, if you want to call it like that. I want to take this opportunity to talk about Teladoc. It's not the pick; it's a peer of Teladoc. But you know, I was on one of your spaces a couple weeks ago, right at I think the day after Teladoc earnings. I'm like, man, I gotta come on. So let me take this opportunity, even though it's quick, and maybe we can do a deep dive later. But I've been in a digital health company called Dario Health, DRIO, for at least a couple years. I got in at $7, went to like 32, and now it's like $4.50. Teladoc got smoked after earnings a couple weeks ago, and one of the reasons they got smoked, they made some commentary saying that the life cycle of or the sales cycle of getting insurance companies on board and employers on board is taking much longer than it has in the past, or they're not making their decisions as quick. I'm like, well, that's odd. I was just on a call with the CEO of Dario Health, DRIO, actually literally 15 minutes prior to Teladoc announcing earnings, and I heard the exact opposite. And I already knew the exact opposite was happening at Dario Health. Now, on the other side of a bear market, whenever this ends, it's, you know, very often you get new leadership. It's not the same companies that come back. And I'm willing to make a bet here that Dario, can be one of the new leaders when we have growth companies going up again on the next time there's a bull market. I think it could be Dario Health, DRIO. So what I did was I reached out to the CEO of Dario about 2 to 3 months ago, and I've interviewed him many times for story trading, so I have his texts and everything and WhatsApp. So I WhatsApp him, and I'm like, Erez, that's the CEO's name. I said, I don't think this market is going to recover anytime soon. We could be in a bear market for like a year and a half. You know, I just want to make sure that you guys have plans to not tap public capital markets, that you can reach profitability without diluting your shareholders at bad share prices. So what's your plan to do that? So I planted that seed in his mind, and maybe he was already thinking about it. But in any case, I had an opportunity to talk to him on the phone a few weeks ago, and then I brought him on Story Trading for an interview. And they are in really, really good financial shape. They're not profitable yet. They're a growth company. They're trading like 2 times revenue, maybe slightly below. But they have enough cash on hand, 80 million cash on hand with like 100 million market cap at this point. Plus, they have access to a non-dilutive line of credit. Plus, they recently announced a partnership with Sanofi, a huge pharmaceutical company. They've already made a $30 million investment in Dario Health, and they have an option to buy equity, additional equity as a backstop. And they really even don't need that money. But one thing I love about this company, every time they've raised money in the public markets, they've done it above market pricing with no warrants. So I just feel really super confident that this company has the balance sheet and they're getting the growth, and everything Teladoc said, they're experiencing the opposite. They're signing up employers left and right. They signed like 50 new employers in the past 12 months. They signed a tier 1, a national health insurance company. Hasn't been announced yet which one it is, but it's going to be announced soon, as soon as they get to like phase 2, which is happening soon. And they have like two or three other health insurance companies in the pipeline. So they have momentum. I believe they're taking market share away from Teladoc in this space where they compete with Teladoc, which is chronic health management. Teladoc is mostly telehealth, 75% of their business, but like 25% is the legacy Livongo business that they acquired, and that's where they compete together, the Livongo and Dario part. And Dario is just kicking their ass. The day after the Teladoc earnings, an analyst came out, one of the analysts covering Dario, and reiterated a buy rating on it with a $31 price target. The stock's at $4.50. They have earnings this Thursday, which is why I'm mentioning it now. I believe there's not going to be any bad surprises. Everything is going according to plan, and hopefully he will instill confidence in the public markets, and on that conference call, the same confidence he gave us in story trading, that they're not going to have to dilute. They're not, they're going to be able to get to cash flow profitability before anything happens, before they have to tap public markets. So hopefully, we'll get a move after earnings this Thursday. But if not, I don't care. I've been holding this for almost 2 years, and it's a long-term, hopefully I don't go in thinking a stock I have to hold 5 years, or like swing positions, sometimes quarters, but hey, if it ends up being a couple years, so be it. So that's the story with Dario Health, DRIO.
All right. And is that the only pick for this week?
I'll give you something to watch. I don't know if I'm going to buy it, but I've given you Kodak before. Kodak has earnings tomorrow after the close, so something to watch. I think there's a big transformation happening there that's going to blindside the market at some point and blindside shorts. I don't know if that day is going to be tomorrow after the close. A director went out and bought like millions of shares on the open market about 6 weeks ago, and they quietly disclosed on their 10K that they've moved into EV battery coating business. They've moved into printable, transparent antenna businesses for like car windshields. They're moving into pharmaceutical manufacturing. I mean, they're doing all this stuff that's like inflecting into out of pilot stages and into production level. And they're like posting 1 million jobs on their website every day. So like, there's something happening here, I think, big, because also that insider who bought millions of shares, they already had a huge stake. They're a huge debt holder in the company, and I think that their angle, if you go look at their website, it's a KLM, I believe, Kennedy Lewis Management Investment Group. It's Kennedy Lewis Management. Their forte special situations, and I get the sense that there's going to be some sort of huge restructuring or coming out party at Kodak. They have a lot of asset value that's not on the balance sheet in terms of real estate value and some other things. I think there may be some spin-offs and restructurings, and I don't know. I think this stock could be a $10, $15, $20 stock. Caveat is, if there's a recession, a lot of their revenue is ultimately consumer discretionary, so there's some risk there. But just watch that story, watch earnings after the close tomorrow. At some point, they're going to have a coming out party. They've been very secretive, very quiet. They have not been releasing the material info and PRs, only in 10Ks. There's no analyst coverage yet. Billion-dollar revenue company trading for $400 million with probably, multi-billion dollars in assets. So that's a very interesting one to me. And if I have to hold that 1 or 2 years for it to play out, so be it. So that's Kodak. And so not necessarily buy that, but watch earnings tomorrow. And the second one, because I'd say watch Kodak. So like maybe buy Drio ahead of earnings, watch Kodak. And then a trade idea would be, if we do get that capitulation, I'm looking for it at like 276 level in the NASDAQ. I'm kind of guessing the equivalent of that will be around $35 on ARK-K. If we get to around $35 on ARK-K, I'm thinking of getting Leaps or buying TARK, T-A-R-K, for a bear market rally. That may not happen this week. Maybe it will, but
so
it might
do you want
happen.
me to write down a specific level?
Yeah, maybe. Yeah. Just TARK, T-A-R-K, if and when ARK hits 35. That's your trade idea. And then Drio ahead of earnings, and then kind of, hey, watch Kodak earnings. Just out of curiosity. You guys should be aware of what's going on there.
Awesome. And then any other closing remarks there?
Closing remarks, I'll be in Vegas this weekend. Gav, I'll see you. And if any of the rest of the panel, anyone going there, let me know. Anyone in the audience going there, hit me up, and we'll get together.
There we go. Looking forward to it.
All right. Yep. See ya.
All righty. And Danny, let's come to you.
All right. Let me first preface what I'm going to say by, there's a lot of different trading styles up here, and certainly a lot of people in the audience. I would suspect that the majority of the people in the audience, they're not scalpers and day traders. They're probably just investors, or somebody looking to get into something, into a stock for, for a swing or for a position trade. So in looking at names this week, I'm trying to put more of a longer term cap on, and not necessarily a trade for this week, but something to maybe open your eyes to. And so I thought it was really interesting, that Andrew said BXC, which is a distributor of building and industrial products, because my number two pick this week is LPX, which is Louisiana Pacific Corporation. And they are an American buildings manufacturer, or buildings material manufacturer. So what I would love to see, if you're looking at this, zoom out, right? On these charts, I'm not saying look at the 30-minute, not saying look at the daily, look at the weekly, look at the monthly chart. And on this one, if you go up into the monthly, it's got a nice, flag that's pretty much started back in May of 2021. So this is something I would definitely keep an eye on for the longer term. It's got plenty of room on RSI to move on the higher time frames. If you look at the weekly time frame, it's been building a nice consolidative base between $50 and $79 over the last year. So when this is ready to break out over, I would say in the $79, $70 to $80 range, watch for this to continue to move higher. So that would be one pick I would say just keep your eyes on. So my number one pick, because that was number two pick. I did my number two pick first, because my number one pick, I don't think I've heard anybody talk about, I want to say, ever. And it's a name we all know. It's a name we probably use almost every day, is General Mills, ticker GIS. They're the consumer food powerhouse. Cereals, soups, pizzas, desserts, pet food, everything. That's a consumer staple. We use their products pretty much every single day. Go ahead and jump on the monthly chart for that. Guess what? We are breaking out this month from our 2016 high. So we're putting in, last month we put in an all-time high, but if you look at the candle, we wicked through those 2016 highs. We're now putting in a solid hammer candle on the monthly chart with a 2 dot squeeze fired on the monthly. So as somebody who uses the squeeze, to me, what that tells me is we likely have another 4 to 6 months of bullish squeeze action to the upside. So if General Mills continues to perform like it's been, we can go back down on a weekly chart, beautiful weekly candle. We can go back down on the daily, beautiful daily candle today. So while the market is tanking, GIS is going up. And so for me, I'm always looking for those diamonds in the rough. Is it a sexy play? No. Is it going to make you rich? No. But it's a consumer staple, and it's going to continue to go up. And if we're breaking out on a relative basis on that monthly chart, watch for this to continue to outperform. And so, I would say to those of you who have been trading or started trading in the last 2 to 3 years, we really were spoiled by the 2020, 2021 price action. And for those of you, and just one thing, just an observation, I've noticed a lot of these spaces of late in the last couple of months, the attendance is down. So I just honestly, I want to thank and applaud everybody who's in the audience right now, because you're the ones that are going to see all the price action. This is not a market to give up on. This is a market to learn from. So I put my two picks in, but I just want to speak to the audience right now and say that, the market goes in cycles. And what I think it was Blake and Story Trader were saying is that we could have a prolonged bear market. It could be 6 months, 12 months, upwards of 18 months. History has taught us that. And it's not the time to look away. It's the time to observe and learn, because these cycles continue to come back, and growth will come back, and that our tech stocks will come back. But in the meantime, it doesn't mean shut off the charts. It means find the new true market leaders Who are the stocks that are making new highs while the market's making new lows? Those are the names to keep an eye on right now. So the LPXs, the GISs of the world, the Pepsis, the Cokes, they're not going anywhere. So there's always a stock or a ticker to trade in this market, but you have to turn your bias off and understand that right now it's just not tech and it's just not growth stocks.
Okay, perfect. Got it, Danny. So those are going to be General Mills, which is GIS, as well as LPX. And that last part, was that your closing comments there?
That was my closing remarks. Thank you so much to you, for Gav, for putting this on, and certainly to all my panel mates up here. And welcome, Sim. Great to have you here. And certainly, big shout out to everybody who's been tuning in, week out, and being with us on the new Monday.
Absolutely, yeah. Big shout out to everybody who came out today. I know it was a rough day in the markets, but you're still putting in the time to learn and find opportunities. Just to run through this, our picks from tonight were Story Trading gave us DRIO, DRIO, and then TARK if ARK hits $35. The Pup of Wall Street gave us LPX and GIS. Trade Tracer had no position. I Love Stocks, which is Vegas, gave us WMT and JPM. Real Pristine Cap, which is Andrew, gave us BXC, and Simply Sim gave us Google and Tesla. So those are going to be the picks for the evening. That's going to be about it for tonight. We're going to run this one at just the hour, a little bit shorter than others, but we have a full day of spaces tomorrow. We're going to be starting out with 12 p.m. EST with Danny will be on that, and Ben, and we're going to have charting and Trend Spider and some all good stuff. So looking forward to seeing everyone on that one. So I'm going to go ahead and end this one here. Appreciate you all for coming out and wishing everybody a great rest of your evening. Take care.